Hello and welcome everyone. Steve here with TradeForexForProfit.com. Today is Tuesday, May 24th, 2016, and we're looking at the New Zealand CAD on the daily time frame this evening. I've opened a sell limit order on this pair, which executed a few moments ago, and I'm now short down to this most recent bounce level. Okay, that's the 2 times profit target. That's why I had to wait on a slight pullback in this particular case. Okay, so let's talk about the elements that go into this trade. This setup is the stop hit pattern. Okay, so there's key elements that I'm going to discuss here real quick. First and foremost is the bounce. All right, when the market bounces, it creates this level here. Okay, right here rather. We bounce from there, creates this level where there are going to be stop loss orders. Okay, anybody that went short at this point in the game, they have their stop order right here. All right, when the market returns to this level, this is going to be an area that's watched. Okay, everybody's watching this level to see what happens. They're taking their shorts, they're taking their longs, they're doing whatever their trading plan tells them to do when the market hits this level. Okay, my trading plan tells me to wait and see what they do, show their hand, and then I take my position. Okay, in this case, what happened was we broke through the level. It was rejected with this bearish engulfing signal, which is one of the signals we trade. If you want to learn the rest of the signals that we trade, come over to the members section. We go into great detail about the signals. Okay, however, this pattern is the stop hit. One of the elements is the bounce, where the stops are located. The second element is the outer Bollinger Band. That has to be touched or real close to or taken out in this case. Why? The reason being is that the market always returns to the mean, okay, which is the 20 EMA. So the further away you are, if you're at the outer band, the further the market has to travel to return to the mean. Okay, the higher probability you have of success. Now, the profit target is the most recent bounce. That's important. That's another key element of this setup. All right, so what do? We wait on a pullback so that the entry will dictate, it will govern, I'm sorry, let me restate that. The 2 times profit target will govern and dictate the entry. So in this case, the entry had to come after a pullback in order to target this level. Okay? Okay, welcome back everyone. Today is now Friday, the 27th, 2016. This was a quick trade. Only 2 days have passed and our 2 times profit target was reached. Okay, so let's just recap the highlights of this setup. All right, wherever there's a bounce in the market, it creates an area that will in the future potentially become dense in orders. All right, so what I mean by that is when the market returns to any level where there was a bounce, you have potential buy orders, potential sell orders, you have stop loss orders that are sitting here. There's a lot of orders. It's this area is going to be dense in orders. So there's a lot of psychology that goes on right here. Okay, I don't care about all that because I wait for the market to do its thing, complete the pattern, the stop hit pattern, form the signal, in this case the bearish engulfing, and that's where I take my entry. All right, but just to highlight what actually happens at an area such as this is there's stop loss orders from traders that went short here. Okay, those are being hit. When you sell, your order is to buy it back. Okay, it doesn't matter whether you're talking about buys or sells. We're talking about an area dense in orders. The banks are going to execute whatever they see fit to move the market the way they want to move it at that time. And then as a trader, you can jump on with that movement after you see the signal and you see everything happen and unfold. Okay, but what happens here also is as soon as the market breaks out, okay, you have long traders that trade the breakout. All right, and think about this candle right here. When it was forming, it was a large bullish candle. All right, it was white, and it looked like the market was really going to move. So you have more and more traders jumping in with their buy positions. Okay, and they're placing their stop loss orders down here somewhere, which inevitably get wiped out. All right, so you have that, and then as the market falls off and begins to taper back, you have short traders. All right, you have traders that when the market forms this wick right here and starts to reject this level, they start selling. As you can see, that's why the wick was created. So when you look at these trades, you have to look at what the candle, read it like a book. What is it telling you? All right, as the market, and it's all about the level, the bounce levels. What happens when it returns there? That's the chapter you want to focus on. All right, in this case, the wick begins to form. That tells me that everybody's looking to sell here. All right, it breaks out. Okay, now everybody's buying. Okay, this has now become an area that is being watched closely. All right, you get another wick. All right, everybody's looking at this level. Okay, so here comes the engulfing. That's where I take the trade. Do I just enter straight away? Do I wait on a 50% pullback? What do I do now? Okay, what I do now is I know where my stop loss order is going to be, and I know where my target's going to be. It's going to be the most recent bounce because that's where the highest level of probability is for the market to return to. So that's my 2 times profit. So where do I enter? Well, that's why this little tool comes in handy. You let this stop loss order and this 2 times profit target govern your entry, and wherever the entry lands, that's where you take your entry. It's going to be different every time. Okay? So hopefully this helps. Stop hit pattern. If you want to learn more, come over, check us out in the members section, tradeforexforprofit.com. Have a great day.